Cool. All right, and we're live. Okay. What's up, everybody? I'm Nick. This is NGO Trades, and today we're gonna do a little chat about how I use the stops and icebergs indicator on bookmap and apply it to the VWAP strategy. Here's a disclaimer. Go ahead and take a look at that. So just wanted to start with what I use in bookmap. So to use the SI indicator, you're going to need the MBO bundle. You can use either the Rhythmic data feed or the bookmap data feed. I use Rhythmic, but my understanding is that the bookmap data feed works fine with it as well. I learned about how to use the SI indicator through Scott Pulcini's SI indicator course, which I think is a fantastic resource if you want to really become an expert in how to use bookmap. And then I also use his zone drawing tool, the pro version, which you can get at the bookmap marketplace. And the tool makes it really easy to figure out if the setup's a long or a short, and if you like what your size is as well. And we can talk more about that in another video. But we'll just get started right here with what an iceberg is as a starting from the top. So icebergs are basically where the large hidden orders are placed in the order flow, indicating areas of strong interest by the institutions and large trading firms. These are often areas where large orders get absorbed and act as support or resistance in the intraday and even higher time frame charts as well. An iceberg order, when you see it on bookmap, it typically represents about 10% of an order from a big player, the smart money. So an iceberg of 100 is actually like 1,000 lot order. A 250 iceberg is 2,500 lots, et cetera, et cetera. And so over a large sample size, these orders tend to act as support, the buy ice orders, and then the sell orders tend to act as resistance over a large sample size. And when I'm trading, when I'm looking for a setup, I like to see icebergs that are bigger than 800, 750 to get detected. And then I'm waiting for a reaction from this zone. I'm waiting to see, does that iceberg defend their position, or do they get run over by an overwhelming amount of aggressive market orders hitting the bid or the offer? And after that, if I see they defend their position, if I see they're getting run over, I'll look for a relevant VWAP entry based on where we are in the chart, whether it's inside the opening range, below, or above the opening range. And these iceberg orders are often found around the important price levels that we talk about on a daily basis. You know, New York VWAP, prior day New York VWAP, the overnight session VWAP, as well as their extreme standard deviations. Not so much the plus or minus one standard deviation, but I've seen large icebergs at like the +2 standard deviation or the -2 standard deviation. And then also round psychological numbers, and then even some high volume nodes, points of control, previous day points of control. So, a lot of the areas that we already talk about as being important, those are important because that's where the big money is placing their orders. And you can see these orders on the bookmap with the SI indicator. Just wanted to show a picture of what the icebergs look like on bookmap. So over here on the left, you see this little blue kind of icebergy like images with a letter and then a number. So that'll be the size of the iceberg. And then T just means like the trade was detected. And then, we have the price line where the bubbles are on the bookmap. And if it's above the price line, that's a sell iceberg. So these are sell icebergs. But if it's below, those are buy icebergs. And I'll have pictures of that later in this presentation. And then if the order gets executed, there'll be a little E with the number. And then orders that are still getting filled, they're over on that right-hand side where you can, like if you trade in bookmap, you can place trades. They'll sit over there and a line will go across the bookmap to show where that's waiting to get filled. So just to reiterate how we can use the iceberg indicator in our strategies, we can think of these areas as areas of support and resistance at key levels. These tend to hold as support if it's buy icebergs being filled at a key level, and they tend to hold as resistance if icebergs are being filled at a key level. We can also see if they don't hold as support or resistance, if there's going to be a breakout or a breakdown around these levels, because those are the days where we typically have those nice, 1%, -1%, 2% trend days. And then also we can scalp around these icebergs because the algorithms that are in the market, they just see these large orders as well, and they like to bounce price back and forth from them, bounce price back and forth away from the zone and then back towards it. So there's a lot of different ways that you can use this to find opportunities to make money in the market. Just a little bit about stop runs here. This is usually the retail money puking out of positions. So we think of icebergs as, initiating positions, wanting to get orders into the market. Stop runs, those are people, mostly retail traders, getting out of the market, getting out of their positions. And these tend to be fade positions. So where we were thinking of icebergs as support and resistance, we want to think of the stop runs as being sort of areas of reversal. And we want to, for ES, I like to look for stop runs that are bigger than about 550. Let's just go through a couple of examples now. So here in the bottom left, you see I have circled an iceberg that was filled. There was about 1,266 filled. So, that's the order, that's about 10% of the total order. So that's about 13,000 lots getting filled down at the -2 standard deviation here, which is the dotted blue line. We've got VWAP, the white line going through the middle. And as you see, price goes down, fills the orders right here, and then they defend their position, and we go for a nice about 15, 20 point move to the upside. And just here's a markup of how you could have used that information to take a trade according to the VWAP strategy. So as you see here, looks like sellers are in control. We go down, we make that first break of the opening range, and then we get some buying right here around that 60-70, 60-72 zone. And if you recall, that's right where that iceberg got filled in this zone, which I have marked off with the yellow lines. So 60-70, 60-72 is right kind of where that black line is going across. You see buyers start to step in. We get a nice engulfing candle that breaks the New York VWAP. We're above the 9 EMA. And then you could have taken a nice New York VWAP break to go double break the range, go up to prior day New York VWAP, which is up here in blue, and you would have had a nice winning trade. So that was an example of buy ice. I wanted to show a couple sell ice examples. So this is bookmap from December 19th. And in the top left here on the bookmap heat map, you can see that there was about 1,293 sell ice detected on the bookmap. And the zone that it was filled at, the price zone, I drew those yellow lines around it. So it's about 59.72.5 to 59.75. And on this day, we go to Trading View. We look at Austin's markup. I stole this from his DRC. Thank you, Austin. And he got a nice short with the low a day VWAP break. And the funny thing is, he didn't even know that he had the sell ice working with him. So let's go back here. We see 59.72 to 59.75 was that zone where the sell ice was. And let's go to our trading view chart, 59.70. Oh, that blue line, that's New York VWAP. So that's it's pretty interesting how, like I said before, these icebergs tend to show up at key areas that we already talk about being important. So this got filled at about, that's 205 to 210 Eastern. You can also see the iceberg get filled down here in the subchart. And so from about 205 to 210, it got filled. Let's go to the trading view chart. Where is that? That's like here. So yeah, basically right at New York VWAP, we come down. It looked like we were going to have a nice double break of the opening range because this is opening range low right here. This is a low a day VWAP. And again, New York VWAP in blue. But sell ice comes in, they defend their position, and you could have had a nice low a day VWAP break. And then here's another example with some sell ice. We got VWAP going through the middle here, and then we have the extreme standard deviations in the purple dashed lines. And so we had some nice selling to start the day, make a couple new low of day, new low of day. We come back to VWAP, and then we get detection of about 1600 sell ice. We go down, come back up. We get a a little bit better touch of the New York VWAP, and we get some sell ice that's added to the position. So you could have said, okay, I'm looking at the book map. I see 1600 sell ice. We go down, come back. We get more sell ice. This is probably the same house that wants us to go down. And then what do you know? After we get this touch of New York VWAP, we go straight down, and that's about, it's 60-20 to, 50, 90, 92. Pretty sweet move there if you caught it. And then this is a trading view markup of that same day. So, you see nice selling pressure, sellers in control. We get filled on those 1600 sell ice at about 10:45-ish Eastern. So yeah, that's like right here. That sell ice gets filled. We get a reaction, then we come back up, then we get some more sell ice, and then we just go down for a new low of day. Here's another example. We got a buy ice example, and then in this one, I had purchased the zone drawing tool, so I wanted to give an example of how that looks. So on this day, this was January 17th, and I think you guys were in Dallas this day. And what happened on ES was we had some buy ice detected here at New York VWAP, the line going right through the middle again. We had about, you look down here, you can see, I don't have it marked here, but it was about 3,000 buy ice. And so what you could have done with this information is say, okay, there's a big player, 3,000 buy ice at New York VWAP, and they seem to be defending their position because we get a low, higher low, higher, and then basically an equal low. And then we go to the upside for about 20 points. So this is a markup of that day. As you can see, that zone is about 1620 to 6020, excuse me. So about 6026. And that's, basically where inside the opening range, New York VWAP's right there. And so you could have found a long opportunity. You get the opening range to form. You can wait for the first break. We get a small weak break. We come down, buyers step in pretty aggressively, and then you could have had a nice 10, 15, 20-point winner. And then we got a stop run example. So on this day, we got VWAP going across the middle of the chart again. We have the 2 the -2, the +2 extreme standard deviations marked up here. And down at the -2 standard deviation, we got about 525 stop runs getting detected. So as you can see, sellers came down, stop run, and we talked about how stop runs tend to be fade events. And we immediately reversed off this area. We had another stop run on a retest of New York VWAP, and we moved to the upside. We came back, retested New York VWAP, and then we just went to the moon from there. And so this is a markup of a trade that you could have taken based on this information here. So you see 5,900 is where the stop run was detected about, more or less. And on the chart, 5,900 is basically at this purple VWAP, the session VWAP / overnight VWAP, whatever you want to call it. It gets filled right around here. We find a nice area of support, and we just continue to make higher highs and higher lows. And you could have taken a double break of the range, or you could have held it for a move all the way up to, look, it goes all the way up to like 6,000. So, or 59, I think it did go to 6,000 actually this day. This was right after the FOMC meeting where the market just tanked. And then this was like the short squeeze a couple days afterwards. But anyway, the point is, this information is very powerful. And, I think it could, if you're already a profitable trader, this can make you an even more profitable trader. So, yeah, knowing where the smart money is placing their bets is a significant edge. Yeah, I think, the more data that you can have, the more evidence that you can have behind your decision making, that's only going to make you a more confident trader in the market. And remember, just think of the large iceberg orders tending to act as support, and like the buy ice as support, and then the sell ice acting as resistance. And, remember, it's trading, so they're not always right. But even if they're not right, that's telling you something, right? This big player couldn't defend their position. They just got run over. So that means that there's some larger entity hitting the bid or the offer aggressively. And you can use that information for the rest of your day to adjust your strategy accordingly. And remember that stop runs are potential fade reversal events. And then this will be another video, but we can combine icebergs and stop runs in the same direction that are very powerful events. And remember that these events occur at important areas: our VWAPs, our value areas, our points of control, our psych levels, fibs, etc. So that's going to be it for me. I hope you enjoyed the video. Please like and subscribe, and I will talk to you guys soon. All right. Take care.